To the UK now, which is making news for the wrong reasons yet again. One of Britain's richest men is moving out. Steel magnate Lakshmi Mittal. Reports say he's leaving the UK. He's now a resident of Switzerland, and going forward, he'll be spending more time in Dubai. This is what reports say. And why is he leaving? For tax purposes. Apparently, the ultra-rich do not feel at home in the United Kingdom. And the reason is rising taxes on capital gains and inheritance.
The economy has contracted for the second month running, as new figures show GDP fell in May by 0.1%. The Chancellor, Rachel Reeves, described it as disappointing, but insisted she was determined to kick-start economic growth. Economists had predicted that the economy would rebound and said the weak performance made it more likely that the Bank of England will cut rates again in August.
Britain's factories are going dark, not from war, but from the cost of keeping the lights on. Steel mills idle as energy bills erase profits overnight. Car output just hit a 70-year low, and economists warn the United Kingdom is on course to become the first nation to unindustrialize itself. The Treasury's scrambling to fill a £20 billion hole while investors dump British bonds at 1990s-era yields. For a country that once forged the modern world, the question now isn't when recovery begins. It's whether Britain can still afford to make anything.
So we must all now confront the reality that the Brexit deal we have significantly hurt our economy. And so for economic renewal, we have to keep reducing frictions. We have to keep moving towards a closer relationship with the EU. And we have to be grown up about that, to accept that this will require trade-offs. That applies to our trading relations right across the world. And as you've seen already with this government, there are deals to be done if you're committed to building relationships. That's what we've done with the US. It's what we've done with India, and it's what we've done with the EU, and we will keep going. We will continue to reject drift, to confront reality, and take control of our future.
Your current proposals for the EU are not economically significant. Are you going to drive harder and faster in getting a better trade deal with the EU?
On trade, Robert, look, we do need to get closer to the EU. It is clear from all of the analysis that the deal that we've got has hurt our economy. That's why we've rebuilt relations and reset relations with the EU, and I'm proud that we've done that. That is why we're moving forward. We had the mandates agreed for the SPS agreement, and that will drive down costs in supermarkets significantly, particularly food costs, and the emission trading scheme just in the last week or two. So we're making progress on that front. And that goes in addition to the other trade deals that we've done with countries of the US that we did. And I remember the days when people were saying to me, you can't have a deal with the US and a deal with the EU, and we've got both. And the deal that we did with India, which it had been in the making, I think, for 8 years until we came along and actually did the deal. So I'm proud that we're making that progress.
The storm had been building for years, but London only noticed it the day the trading floor fell silent. It wasn't the silence of a crash, nor the frenzy of traders trying to salvage collapsing portfolios. It was something far worse, an eerie, paralyzing uncertainty. Screens still glowed with charts and lines, but the numbers were all red, blinking like warnings no one could decipher fast enough. Phones rang, unanswered. Brokers stared at their terminals in disbelief as a wave of alerts cascaded across financial systems. Mass withdrawals, cancelled investment orders, and unprecedented capital transfers were sweeping through the city. The nerve center of UK finance had been breached not by hackers, not by foreign adversaries, but by something far more destabilizing, a global shift in confidence. Investors were fleeing to Africa, and London had never been this vulnerable. Rumors spread before officials could form explanations. The flight of capital wasn't slow or gradual. It was immediate, deliberate, and coordinated. For decades, London had positioned itself as the safe haven of the world, the fortress of global finance where wealth rested securely. But that illusion shattered the moment the digital trails began pointing toward Africa's rising economies. At first, the movement seemed absurd. Senior analysts dismissed it as a temporary anomaly, a speculative fad triggered by short-term events. But then came the confirmation. Major investment groups were relocating billions into emerging African markets, energy corridors in Namibia, tech clusters in Kenya, rare earth mineral hubs in Tanzania, high-speed logistics chains in Ghana, and sovereign wealth partnerships in Rwanda and Botswana. Africa, long underestimated, had become the new gravitational force for global capital. British media struggled to explain what was unfolding. Overnight news specials ran with flashing graphics, tax experts debated emergency measures, and Parliament held frantic closed-door meetings. No one had predicted such a sharp rupture. Even during past recessions, even during global financial crises, capital had retreated into London, not away from it. But this was different. This was structural. This was historic. The first clues appeared months earlier, hidden in plain sight. African nations had begun finalizing sweeping reforms, fast-tracked digital registries, simplified tax codes, AI-driven anti-corruption systems, and cross-border commercial alliances that turned fragmented markets into integrated powerhouses. Lawyers in British firms had laughed at the announcements, calling them overly ambitious visions that would take decades. They didn't laugh for long. By the time reality hit, African stock exchanges were seeing record-breaking listings. Bond markets were tightening in a good way, demand outstripped supply, infrastructure that Europe once believed Africa would never build was suddenly operational. High-speed rail corridors connected trade zones with precision. Renewable energy grids produced surpluses. The continent, once portrayed as dependent on foreign capital, had become a magnet for global investment. The UK tried to reassure markets. Officials made speeches about stability, historical ties, and the unique value of London's financial ecosystem. But investors weren't listening. They were watching the numbers, and the numbers painted a future that Britain couldn't control. The panic became visible on a cold morning when a delegation rushed into the Treasury building for an emergency briefing. The atmosphere inside was suffocating. Advisors whispered urgent updates. Economic forecasts were rewritten. Currency strategists warned that the pound was weakening faster than models could predict. A senior official tried to calm the room by insisting that investors would eventually return, but his voice trembled, betraying what everyone already knew: the UK no longer had the leverage it once wielded. Meanwhile, across Africa, the mood was electric. Skyscrapers that didn't exist 10 years earlier now housed bustling trading firms. New ports lit up the coastline with state-of-the-art automation. Fintech platforms processed millions of transactions daily. African universities, once overlooked, produced engineers and economists who built solutions tailored to local conditions, solutions that global investors admired for their innovation and efficiency. The shift wasn't about charity or hope. It was about profit, stability, and growth. Africa offered all three in abundance. Inside London's financial district, fear spread faster than analysis. Hedge funds scrambled to understand how they missed the signals. Consultants drafted expensive reports explaining why capital flight was accelerating. Most cited the same reasons: Africa's demographic boom, resource autonomy, rising middle class, digital infrastructure, political recalibrations, and continental trade integration. But those explanations came too late. The ground had already shifted. Some British firms attempted to pivot. They announced new Africa investment units, partnerships with African banks, and Africa-focused strategies. But investors weren't impressed. The world no longer needed London as a middleman. African markets had become capable of handling their own capital flows, their own regulations, their own narratives. For the first time, major ventures in the continent didn't require approval or endorsement from European institutions. In private circles, British elites expressed disbelief. They recalled the days when African economies were dismissed as unstable, unscalable, too risky. Now the risk was in staying in London. The city's skyline glassed towers symbolizing centuries of financial dominance looked suddenly fragile. Luxury districts saw fewer corporate bookings. Fine dining restaurants lost their usual flood of investment bankers. Venture capital firms whispered about relocating offices to Johannesburg, Kigali, Lagos, Nairobi. Real estate agents reported that long-term demand projections had collapsed. It wasn't that Africa was rising, it was that London was no longer the axis around which the world turned. The panic intensified when a multinational commodities group announced the relocation of its headquarters to Africa. The declaration sent shockwaves across Europe. Markets dipped. Political commentators questioned national strategy. The UK government hastily arranged diplomatic calls, attempting to negotiate incentives for the company to stay. But the decision had been made. They didn't need London's proximity to influence the markets anymore. The future was in Africa, closer to resources, closer to growth, closer to innovation. The ripple effect was immediate. Other corporations began evaluating similar moves. Real estate portfolios shifted. Pension funds diversified aggressively into African bonds and equities. Tech startups realized that Africa offered expanding consumer bases and untapped digital landscapes that no Western market could match. As London tried to reassure the public, Africa continued unveiling transformative projects, solar megaparks stretching across the desert, data centers powered by geothermal energy, financial corridors linking regional stock markets, AI hubs partnering with global tech giants, and agricultural logistics networks that revolutionized food exports. Documentaries were made, analysts published reports, conferences filled with global investors eager to understand the mechanics of Africa's rise. For decades, many had underestimated the continent, trapped by outdated narratives. Now, reality forced recognition. London's fear wasn't simply losing money, it was losing relevance. One of the most telling signs came quietly. Foreign students, who once saw UK degrees as essential stepping stones into global finance, began choosing African universities instead. They wanted proximity to the center of growth, to the future of markets, to the industries being built from the ground up. Enrollment trends shifted, and London's universities scrambled to attract candidates with scholarships and new programs. As African megacities expanded, the world watched in fascination. Bridges, bullet trains, financial districts, and innovation parks became symbols of the continent's new identity. Africa wasn't waiting for validation, it was creating its own destiny. The UK, desperate to regain footing, drafted new investment laws, lowered corporate taxes, and launched aggressive marketing campaigns promoting London as a competitive global hub. But investors saw through the FOD. The issue wasn't policy, the issue was momentum, and momentum had shifted irreversibly. One striking moment came during an international economic summit. African delegates arrived with confidence, presenting data-backed proposals while London's representatives made defensive arguments about preserving stability. The contrast was impossible to ignore. Africa spoke the language of opportunity. London spoke the language of fear. In financial media, headlines grew harsher by the week. Analysts wondered whether the UK was entering a prolonged era of stagnation. Op-ed writers questioned past decisions that left the country over-reliant on services with shrinking global influence. Some political figures blamed external forces. But the truth was simpler. The UK underestimated Africa for too long. Inside Africa, the feeling was different: optimism, pride, determination. A sense that the world had finally begun to recognize what Africans had known all along. Their continent was not a land of problems, but a land of possibilities. The rise was not sudden. It was earned through decades of work, reforms, and vision. The defining moment of the shift came when a massive international investment forum, traditionally hosted in Europe, announced it would be held in Africa for the next 5 years. Delegates and corporations followed the money. Hotels booked months in advance, infrastructure expanded to accommodate the surge. The symbolism was impossible to miss. Global investment leadership had migrated. London newspapers published panicked editorials. Commentators described it as a reversal of empire, a new global order, a historical correction. For older generations, the transformation felt unreal. For younger Britons, it felt like a warning: adapt or become irrelevant. As the UK grappled with change, Africa continued forging new alliances, continental agreements, high-level trade negotiations, and strategic partnerships that bypassed European mediation. Ports were upgraded to global standards. Energy grids achieved stability unseen in previous decades. Tourism boomed, middle-class households grew. Small and medium businesses flourished across bustling urban and semi-urban landscapes. For many British investors who relocated, the experience was more than financial. It was a revelation. They saw firsthand what the world had ignored for too long: ambition, ingenuity, resilience, and a hunger for progress. They returned to London not with fear, but with admiration and with warnings that resisting the shift would be futile. The UK finally accepted what analysts had been whispering for months: Africa was no longer emerging. Africa had emerged. The long-held narrative had flipped. Africa wasn't chasing global relevance. It had become the center of gravity. And in that transformation, London found itself scrambling to remain part of a world it once dominated. The future was being written in new capitals, across new skylines, driven by new voices. The world was watching. Investors were moving. Power was shifting. And no matter how many conferences London hosted, no matter how urgently the government spoke, the truth was undeniable. Africa had become the destination. London was now the departure point. The transformation wasn't a warning. It was a declaration. A shift London couldn't stop. The shift accelerated faster than any analyst could track. What began as a quiet capital migration evolved into a structural reordering of global finance, and London was now watching its influence slip through its fingers like grains of sand. Even the most optimistic voices in the UK had run out of reassuring rhetoric. Investors had spoken with their money, and their money was flowing south. The final blow came at dawn on a humid Monday morning when a series of synchronized announcements erupted across global news networks. Africa's economic bloc had finalized a new continental investment charter, a framework that guaranteed investor security, sovereign standardization, and seamless cross-border capital mobility. The charter eliminated bureaucratic bottlenecks and introduced a unified regulatory system more advanced than any in Europe or North America. London's financial press went into free fall. This wasn't just a policy update. It was the birth of a continental financial engine, one that could rival the EU, the Gulf, and even China's expanding markets. With the stroke of a pen, Africa had become the world's most integrated investment destination. As the charter rolled out, tech screens across London flashed with alerts. More firms had announced relocations to African cities. First it was logistics companies, then manufacturing giants, and now even pharmaceutical and tech conglomerates joined the exodus. Investors weren't simply diversifying, they were abandoning their traditional dependence on the UK. Near the Bank of England, young analysts whispered about their future. The city's glow had dimmed. Opportunities were shrinking, bonuses evaporating, and the prestige of working in the square mile no longer meant what it once did. Some spoke boldly, saying they would follow the money to Africa. Others resisted, clinging to the hope that London would rebound. But the truth was becoming clearer each day. The new frontier lay elsewhere. Across Africa, meanwhile, the pace of development seemed almost unreal. Skyscrapers rose at impossible speeds. Construction cranes became fixtures of the skyline. Business districts buzzed with activity late into the night as investors, policymakers, engineers, and entrepreneurs collaborated on projects that stretched beyond borders. Africa had become a canvas on which the world painted its ambitions. At the same time, African leaders emphasized a narrative absent from the West's economic playbook: shared prosperity. Investment was not only pouring into cities but also transforming rural economies, expanding agricultural value chains, empowering women-led enterprises, and establishing green manufacturing zones. Africa's growth wasn't built by extracting wealth upward but by broadening the foundation of opportunity. London watched the transformation, with equal parts disbelief and forced admiration. In Parliament, the debates grew heated. Some argued that the UK should renegotiate its African economic partnerships. Others suggested tax holidays to lure back investors. A few even proposed emergency capital controls, but none of those ideas could reverse the tide. The shift was structural, not circumstantial. For decades, Africa had been seen as a destination for raw materials and aid. Now it was the world's most dynamic marketplace, a place where ideas gained traction, capital multiplied, and innovation flourished. The UK's financial elite knew that rebuilding confidence would take years. Trust, once lost, was the hardest currency to recover. But even as the panic persisted, quiet introspection began. London finally confronted the fact that global power was no longer anchored in legacy. It flowed toward potential, momentum, and growth qualities Africa possessed in abundance. A defining moment came during an international broadcast interview with a prominent African economist. When asked why investors had turned away from London, the economist replied calmly, "Because Africa is building the future. London is defending the past." The comment lit up social media, igniting debates from Lagos to Nairobi to Johannesburg, and in London, though officials bristled, the public sensed the sting of truth. As the world watched Africa ascend, alliances began to shift. Middle Eastern sovereign wealth funds increased their partnerships with African nations. Asian conglomerates opened headquarters in African capitals. South American and Southeast Asian states negotiated new trade agreements. The global South was forming a new economic constellation, with Africa at the center. And then came the milestone that sealed the transformation. Africa unveiled its first multinational digital currency, backed by gold, rare earth minerals, and a diversified portfolio of sovereign assets. It was modern, stable, transparent, and immune to the inflationary cycles haunting Western economies. The impact was immediate. Investors flocked to the currency, driving its demand beyond early projections. London's financial commentators were stunned. The UK had always believed its currency would remain a global heavyweight, but Africa had introduced a new contender, one built not on imperial history but on modern economic logic. In a symbolic gesture, an international commodities exchange previously headquartered in Europe moved its operations to an African metropolis. The decision sent ripples through every major financial hub. It meant global trade was no longer mediated through Western frameworks. It meant Africa was now a creator of markets, not a participant in them. As this new reality settled into the global consciousness, a surprising shift happened in London's culture. Where once there had been denial, now there was curiosity. business groups organized delegations to Africa, hoping to understand the ecosystem's reshaping. World finance universities redesigned their curricula to include courses on African economic strategies. Young graduates began learning Swahili, Hausa, Arabic, Amharic, Yoruba, Zulu, and other continental languages, recognizing where future opportunities lay. In Africa, the optimism reached a crescendo. Cities transformed into hubs of light and motion, startups attracted billions in funding, agriculture reinvented itself with drone technology, AI forecasting, and smart irrigation. Renewable energy grids interconnected regions. Manufacturing hubs produced everything from electric vehicles to advanced medical equipment. With foreign investment came domestic growth, and with domestic growth came global influence. The world had turned irreversibly. London, despite its struggles, quietly accepted a new role, not the gatekeeper of global finance, but a participant in a multipolar economic era. And though the adjustment was painful, it marked the beginning of a humbler, more realistic approach to global economics. The final scene of this great shift wasn't marked by panic but by recognition. Africa had risen not because the world allowed it, but because it had the vision, resolve, and capability to claim its place. London, watched as the continent it once underestimated, became the engine of global growth. And in acknowledging Africa's ascent, the UK found a strange sense of clarity and understanding that the world was richer, more dynamic, and more balanced when power was shared. The shift was unstoppable. Africa's rise was permanent, and London's story was no longer one of dominance, but of adaptation in the shadow of a new global leader. A leader the world could no longer ignore, a leader called Africa.